Welcome to this explainer. Today we're doing a total forensic dive into Ondas Inc.'s spectacular Q1 2026 earnings report. Our goal here is actually pretty simple. We want to separate all that loud headline noise from the actual physical money. Because, if you just skim the press releases, you're going to completely miss the real story of what's happening with their cash flow. And as focused learners, we absolutely need to figure out the true financial health of this business.
At first glance, man, this quarter looks downright historic. We're talking about revenues skyrocketing an unbelievable 1,065% year over year. That is literally tenfold growth. That kind of explosive jump is a surefire way to grab everyone's attention and completely dominate the financial news cycle.
To put that massive percentage into real numbers, it brings their top line to a record-breaking $50.1 million for the quarter. Just compare that to a measly $4.3 million in the exact same quarter last year. It's abundantly clear that their core and strategic growth programs are just rapidly scaling all over the globe.
But hey, as financial detectives, we really have to look right past that flashy press release and ask the absolute most important question for any business: what is actually happening with their bank account? I mean, sure, revenue's great, but free cash flow, that is the ultimate lifeblood of long-term sustainability. We really need to follow the money.
All right, Section 1, the headline illusion. Let's dive right into this massive reported profitability and peek behind the curtain of those flashy numbers.
So there is a staggering difference between their reported bottom line and the reality of their day-to-day operations. Now, the headline net income looked like a massive total victory, with total other income topping $404 million. But the reality? Their actual operations lost $42.6 million. That is a massive gaping hole between accounting profit and operating reality. Section 2, Paper Gains Explained. So naturally, we have to ask, where on earth did all that headline profit come from if the core business lost over $40 million? How does that math even work out?
Okay, here's the kicker. The crucial point is that this $389.5 million gain, it is pure 100% paper accounting. It is completely devoid of cold, hard cash. Because of how they structured their recent financings, certain warrants have to be valued as a liability every single reporting period using a specific mathematical formula. When that valuation changes, boom, it triggers a gain or a loss on the income statement. So this quarter, it created a phantom $389 million gain that literally never even touched their bank account.
And it doesn't stop there. Add in another $51.5 million gain just from deconsolidating their subsidiary, Ondas Networks, and it becomes crystal clear that this massive net income is basically an accounting mirage. In fact, they have a staggering $1.1 billion, yes, billion with a B, total warrant liability sitting right there on their balance sheet. Again, absolutely none of this reflects cash generated by actually selling their autonomous systems.
Section 3, Following the Cash. This is where we move completely past the income statement and separate the accounting fiction from the hard financial reality. Let's look at that free cash flow.
Now, this brilliantly illustrates the true flow of funds for the quarter. Just look at these categories. They had heavy cash burn in their actual operations, losing $51.3 million. They spent heavily in investing activities to the tune of $474.2 million. But they stayed afloat and then some because they had a massive $968.5 million influx entirely from financing activities. And here is what's really crucial. Notice that this newly raised cash isn't going towards stock buybacks. It's not paying out dividends, and it's not servicing legacy debt. Nope, it's being channeled directly into reinvestment and scaling the business.
Looking directly at the source document, we can see that the $51.3 million operating burn wasn't just, wasted money. It actually includes a $47 million increase in working capital. What does that mean? It means they're tying up cash in things like inventory and receivables to physically support the surging global demand and the growth initiatives they're aggressively pushing.
Moving right along to Section 4, where did cash go? Let's break down that cash burn a little bit further so we can see exactly where those operational dollars are flying off to.
Notice how the $36.9 million in cash operating expenses is split up. We've got $13.3 million going to corporate-level overhead, so things like corporate development and ecosystem engagement. Meanwhile, the lion's share of it, $23.6 million, is going directly into their Ondas Autonomous Systems, or OAS, level expenses. This source data reveals that these operating investments are highly intentional. They are actively funding personnel, they're expanding their global operating platform infrastructure, and they're integrating highly strategic acquisitions like Mistral and Worldview, which are really going to accelerate their defense and intelligence capabilities. Section 5. The billion-dollar war chest, which brings us to a really critical realization. If they are burning over $50 million in operations and spending so heavily on new acquisitions, how are they surviving without their accounts completely running dry?
Well, the answer lies in early 2026. In January, they executed a massive equity offering, raising a staggering $959 million in net proceeds. This built right on top of a previous financing round from October 2025. So by the end of March, their total cash and short-term investments exceeded $1.4 billion.
And this perfectly confirms it, right here on the balance sheet. It is absolutely vital to understand this point. They didn't earn that $1.48 billion by selling autonomous drones or ground robots. They raised it directly from investors. This massive war chest is exactly what allows them to sustain their current cash burn rate while they scale up.
And, they aren't just letting this cash sit idle in some checking account either. They actively deployed over $429 million into short-term liquid investments to generate yield. Plus, they used $31.8 million directly for strategic company acquisitions. And they currently hold about $40.6 million in non-affiliated private company equity. They are aggressively using their financing to essentially buy growth and capability.
All right, Section 6, True Financial Health. So what does this entire forensic cash analysis actually tell us about Ondas' true sustainability and runway? When you follow the money, what is the ultimate bottom line?
The main takeaway here is that yes, while they are currently burning cash to grow, their revenue is scaling so fast that they're finally seeing real operating leverage. In fact, things are moving so quickly, they've actually pulled forward their operational profitability target for that OAS division to Q1 2027. That is a full 6 months earlier than they previously expected.
And this confidence, it isn't just based on hopeful projections or wishful thinking. It is backed by a surging pro forma backlog of $457 million. This reflects massive, very tangible global demand for their unmanned systems, particularly in the defense and security sectors.
Which leaves us with the ultimate question. Now that they have a $1.4 billion cash runway fully secured through financing, can they execute on that massive backlog and finally turn this paper illusion into cold, hard operational profit? They've got the funds, they've got the demand. Now it's all about execution. We'll have to keep following the money to see if they pull it off. Thank you so much for joining me on this explainer, and remember, always keep asking the right questions.